right, howdy everybody. Come on in. God, it feels like forever since we've had a webinar. It's only been a week. Can somebody just let me know that you're hearing me and you're seeing my my main screen, my dome screen, which now has a couple of footprints on it. Oh my God. Can you guys hear me? Yep. Okay, good. All righty, we'll give everyone a couple of minutes to roll in. We have a lot of stuff to do today, guys. It's going to be fun. Some exciting news to share with y'all. Lee and I had a nice chat a couple of hours ago. Thank you, Summer. And we came up with some really cool ideas. And also, to share with you along that line, now that I've had some time to discuss with Lee some of the stuff he's been doing with his custom software and his bots and whatnot, some really cool stuff going on over there in emoji world. All right, I am going to give it just another minute or two. There's 28 pre-signups. I actually wrote a little algorithm to figure this out a couple of days ago, or a couple of weeks ago. The number of people that sign up, the number of people that show up based on time of day. And so at this one, the optimal number will be 18. So let's see what actually happens. It's 14 right now. So anyway, all right. While we're waiting for the next couple of folks to drift in, it's just now going 9 o'clock. I am going to talk about a variety of things. Let me bring up just the Zoom thing for a second. This is just old trainer habits, you know, and since I'm not doing PowerPoint, I just feel like I have to tell you what the plan is and then see if we actually stick to the plan and then repeat what I've told you and what you should have learned from it at the end. That's kind of the structure of tell them what you're going to tell them, teach them, and then tell them what you taught them. So today, this is at least 2 parts. I'm hoping to get this done in 2 parts to my satisfaction, so you guys are learning. But basically, we're going to talk about the concept. Oh, and before I do that, let's see. I don't see Pavel here. I just want to ask you guys the cursor problem. Can you see my mouse pointer? I turned off all the contrast. It's just white. So can you see where I'm pointing? Yes? Easy to see? Okay, how about if I'm over here on a chart? I know that was a problem before. I was pointing to charts and you guys could not see what I was referring to. Is that better now? Yes, okay, cool. Yeah, it turns out that if you have your Windows pointer set to optimize whatever the background is, Zoom doesn't recognize that and just blacks it out. That's the problem. So Pavel, tomorrow morning when you're listening to this, that along with what Zoom said, but it's just easier to keep my cursor white, even though I don't like it during the day as much. Okay, so that was one question. Let's see, the second thing I wanted to cover before we get going is what? Hang on a second. I lost my train of thought. Oh yeah, okay. So, okay, that was question number 1. Number 2, this agenda is really ambitious for even the 2 days. Oh, thank you, Dimitri. You were one of the people I was looking for to ask. So this is kind of remember I've done a couple of sessions. If you go back and look at all the previous meetings, I've done a bunch of putting it all together. I use that phrase a lot. And so what we're doing now is we're not only putting it all together, but I'm going to try to teach you guys at least the beginnings of how to get from your chart thinking to the dome successfully. And in order to do that, I cleaned some stuff up on my domes that, again, I'd done in the past, and I found I just sort of forgot about it. And obviously there's no live market right now, and I did that intentionally. Tomorrow, once you have heard all of this stuff, we'll go into doing it live. Today's going to be more theory. So with that in mind, I took a screenshot Friday and when everything was running. And I want to just point out a couple of changes I made because they're subtle, but they're important. Number 1, Lee had been asking me if I had the colors right in the last webinar. when we were talking about the momentum tails, and I did, but I had them flipped over where, you know, the bids were on the left and the ask was on the right. You know, I just had them flipped, and I put them back when he pointed that out to me, and that clarified things even better. But then I realized, you know, the momentum tails make it so that the building of footprints is really clear, and this will be much easier to explain when the market's running. But I snipped this one example to show you that not only with the idea of current trades and total trades and the volume profile, not only can you see high volume nodes, but if you set it up this way, you can see the attempt for momentum to drive into those and whether they hold or not. And as we talk more about footprints and getting away from the whole idea of, you know, charts that look like, oh, I'm trying to click on this chart to bring it up. That's pretty funny. Okay, so that's not a real chart, Jeff. The real chart's here. So anyway, that's just an image. But what I was trying to show you was the idea of switching here. Let me just grab one of my actual charts over here, so that'll make some sense. So getting away from this idea of charts being horizontal and that mattering to what you see on footprints, which is vertical, but there's more to it than that. The verticalness is only part of it. It's what happens at those different inflection areas that we've talked about and how to read it. And, you know, as some of you have already picked up, there's not only finding your Bubba there, but there's an art form to learning it. And so making it visually appeal to what you yourself are looking for is really important. So hold that thought for a second. That's the idea of what I was doing here. And I'm going to explain a little bit more about that in a second. But also what I'm trying to do is wean you off of anything but certain things that you need to see on a chart for context. And the vast majority of what a good trader does can be seen on the dome. Even, for example, this conversation keeps coming up. Well, I like to have a 30-second chart because I can see springs and upthrusts on it. I do too. Those of you that have said that to me, and it's 10 of you have said that to me. So I get that. I get that. It's real easy to see those. And so in this implementation, I put seconds back, and we're going to talk about that. We're going to talk about how you can see things like that on a traditional chart, but how if you really want to become skilled at it, you really have to make all of your efforts be about learning to see that here. And it really isn't as hard as you think it might be. But in the course of discussing this and ideas to move forward, Lee and I had some really good ideas, as I mentioned. And so what I decided to do today was, in addition to the agenda we have, is talk about what we're going to do going forward. And I'm going to elaborate on that in a minute. So there's kind of 3 subjects going on here. Those of you that are starting to get order flow, your next challenge is getting very dome oriented and starting to understand where footprints can be of value. I have avoided that in this workshop because to get the theory of order flow, I think you kind of had to go back to the way we did it. And Lee and I talked about that too. But that makes guys like me who are good at order flow and guys like Lee, it makes us almost revert in our thinking. So the purpose of this session and tomorrow's session is to help my thinking come back to being vertical and to bring you with me along the way, and to tell you that we are going to have a continuing Menti small group, something to continue this workshop. Both Lee and I are going to do it. I'm going to give you more details at the end of this session, but I'm going to kind of explain things we're going to be doing in that going forward Menti group, tiny workshop, small group, whatever you want to call it, in today's session, so you can kind of see whether you decide to do that group or not and go forward with us. You can see the challenges that you need to learn one way or another, yourself or with us. And you can see some of the opportunities too, because the beauty of getting down to this level that's this granular, and I'm referring, for example, to a 45-second footprint chart, is that, and this again is contrary to the conventional wisdom, you know, the longer you go out, the more, you know, the more solid the time frames are and the more the indicators matter and all the stuff you've been fed that, you know, always zoom out to, you know, the 6-month time frame. The flip chart of that, or the flip side of that, is that the information on the absolute shortest time frames you can come up with is the most accurate, because in the shortest interval, a trend is the most pure. Simply by definition, it has less time to become not a trend, right? So there's a lot of information that can be gleaned from footprints if you know what to look for. And some of that's automatable. And that's kind of the path I'm on for 2020 and 2021. It's also the path that Lee's been on for a while, if you've been looking at any of the emoji stuff he posted. And so we're going to kind of blend our two approaches in an experiment for January, February, and March. So that's the thing we're working on. Again, I'm going to elaborate at the end. So if you have to leave early, you'll have to catch up tomorrow or hear the recording, because I don't want to focus on that. I just want to focus on the thinking behind that. And some of it came out of bringing it back to where I started a minute ago, the momentum tails. The momentum tails are like this micro, 500 millisecond view of momentum. And so what I decided once I saw how that worked was that was a really good way to show it banging into high volume nodes or not. And so an example when this was running was this was kind of going back and forth between here and here. And 1 minute, the buy side momentum tail would light up, and then it would be on the sell side. And I kind of caught a second here where they were equal, and in the middle of that little range with a high volume node above, which happened to be the VWAP, and a high volume node below, which happened to the POC. And I thought, my God, this is a really cool little footprint right here because there's so much going on. And so that's a good example. If you zoomed into the actual, every few second view of this, there's some very, very gameable events that occur over and over again, much like the setups that I have explained to you guys in the workshop. So that's kind of the direction we're going to head as we get better, with order flow. And I would encourage you to do the same, not necessarily to automate and not necessarily to trade faster time frames, but to understand the nature of order flow as a tool. Okay, so a question from Jerry. Am I using Trading Technologies MZ Pack? Okay, great question and timely. Lee, as it turns out, is actually writing a footprint product for Ninja and for Sierra that's going to do a lot of the stuff I'm talking about. And it will have some features of what MZ Pack does. And he and I were talking about that this morning. And I brought up Trading Technologies and, ADL and all that. And not that sophisticated. It's more going to be, providing user data, and he's going to do some automation within that. I'm way oversimplifying that, but Lee, if you want to try to explain a little more, I don't want to get too off the track, but let me know if I totally mucked that up. But anyway, so the bottom line is you shouldn't need either of those, but we really don't know yet. Lee's just finishing up his Ninja product, so obviously I'm going to test it, maybe at first quarter. And we just think there's some tremendous synergies here. And quite frankly, a number of you are really, really good critical thinkers and would be really good kind of charter founder members of this little team. And so again, I'm going to talk more about that in a minute. I can tell you the only thing I have so far, and I don't even know if, if Lee liked it or not, but I'm calling this the Motley Crew. And there's a good reason for that, which I'll explain, but that's not the group. The group spells it differently. But a Motley Crew is kind of a group of misfits. And they generally that successful at whatever they do. The idea of the band was successful at disruption. They were kind of hard rock back in the 80s. And anyway, there's a really good story from IBM when I was an IBM rookie that I will tell the people of the Motley Crew. And then if they don't like the name, we can change it, but that's why I named it that. Okay, anyway, so that's kind of the broad strokes about some of the stuff we're gonna do there. I'm gonna elaborate more in a minute toward the end of this session, and I'll discuss it again tomorrow. I will post a PayPal link for it if you wanna do it. And I will talk about, what we're gonna expect of people. At this point, there's about 12 of you I've conversed with, and every one of you is welcome, and I think you'd all make really good additions. And I'm also going to leave this at this point open to anybody in the workshop that wants to come along. You can try it a month at a time and see. We are not doing Furu stuff. Again, I'm going to elaborate more about what we're offering in a little bit. But I don't want to get too distracted from this webinar, even though the two subjects kind of go together. Okay, so moving forward, if you go back to, kind of our agenda here, seeing chart patterns on the dome, using ATMs or not. I just want to mention that, and then I'm going to talk about chart patterns with respect to springs and upthrusts. One of the things you guys saw me doing when I'll let everybody know for how to follow up on that at the end. So one of the things that, hang on one second, I'm getting someone outside of the workshop needing my attention. Give me just 1 second. I'm sorry for the interruption, guys. There's a little bit of life going on in my background here that I have to attend to for 2 seconds. Okay, sorry about that. Okay, when you guys saw me live trading, you saw me not using any brackets or stops or targets at all. And you also saw me approaching my trading from the perspective of somebody that's trading a reasonably large account. And one of the things that I realized as I was trying to think about winding this up, and I'll tell you exactly, this is kind of a fun story for you guys, because I was talking about doing this $10,000 a day challenge, and some people were interested in asking me about it, but generally there wasn't that much enthusiasm when I would talk about it. It would just kind of, oh yeah, that'd be cool, watch them do that, whatever. But then when I started talking about, well, let's put this $4,000 in an account, we can all kind of trade it together, you guys all lit up. And I realized right away, why? Because that's just much more relatable for all of you. Trying to pass a combine and make your first $5,000 withdrawal and build up your personal account while you maybe run a bot like Lee's going to talk about doing in a Top Step combine, or like I've told you, I do that as a development lab to test an idea. So I realized in doing that, and that's why I kind of went to the 4K idea, and let's try to trade one lots. And one of the things that was immediately obvious, other than the fact that I didn't know this new version of Ninja or the new version of Jigsaw well enough to do it live right away, I had some bugs I had to work out, like with journalytics. But other than that, one of the things I realized was that my mindset had to be recalibrated. I always have the mindset, for example, I'm managing risk of $1,500 a day before I even take a circuit break. Can't do that with a $4,000 account. But if you're going to put it down to $150 of risk, managing risk becomes a very different mental exercise. Because a setup that works, and listen really carefully, guys, to this next statement. Okay, this is one of those, if you haven't had enough coffee, or if you're asleep, or if you're in Europe and you're about to go to bed, stop for a second. Okay, what I'm about to say is that the mindset of doing that in a small account is completely different. And one of the things that I realized that I had to put my mind back to that. I hadn't done that in a while, where I had traded the mentality of a $4,000 account, where, a $300 loss is 10% of capital. That's way too much, but, given the risk reward, that might make sense, So you got to make sure you're really clear on that. And I wasn't. And so in the process of going back over that, I also realized that I've given you this library of tools, the setups. And, here, just as one other example graphically. So, then I go and I look at the Slack, and I thought, okay, I want to kind of clean this up and leave what's good here for those of you that want to come back and check on it. And, and I realized in trying to do that there's just so much here. It's even overwhelming if you participated in it. So in doing that, I realized that the best thing I could possibly do for all of you was to whittle this all down this week into how can I get out the door and consistently make money the best, given the tools you've taught us, and given, if you guys are interested, where we're going forward from here, because you're welcome to come along on that little journey. So that's what's happening. And in order for that to work for most of you, you're going to hate me, but you need to strip out a whole bunch of the setups. Several of you have been asking me questions about the range setups and about some of the others. And again, I realize the problem with that. It's just too much information. So I posted this in the Slack for you guys. And I'm even going to make it more simple than this, but notice how a lot of setups either disappeared or they became a note, like high volume reversal. If you're looking at springs and upthrust and high momentum, you're going to get into a high volume reversal trade kind of automatically. And the same thing applies to edges. The only edges that are really, really good and gameable outside of the idea of range trading are the ledges where it breaks out. So what I did was I kind of whittled down everything to a minimal set of the setups we learned under certain conditions at certain times of the day. Now, obviously, some of you need to adapt this to what you're doing, but it's basically just a subset. It's everything we've done whittled down to the things that I think are the absolute easiest ways to make money, given not knowing a lot about the underlying theory more than you've learned here. In other words, most of you and most of us, and also given the parameters of trading a one lot, $4,000, $5,000 kind of account. You cannot afford to make mistakes. You can't afford to have a setup that sometimes really pays off, but you got to take too much risk to play it, and I'm submitting to you that playing the range trades, for example, overnight, that's an example of that. It's too difficult to manage risk with one lots to do that. I went back and looked at my trades again and blah, blah, blah. So what I'm going to do is I'm going to kind of whittle this all down. And so that's the purpose of today and tomorrow. Okay, so that's kind of a 20-minute explanation. But the second part of the agenda about using ATMs, okay, that's basically the brackets. I'm going to detail that tomorrow, but I also realized that for the type of trading you guys are doing, you need to have them. You can't afford to put a stop on like I do, and if I ever do. I mean, there's a lot of times when I'm trading a lot of size, I keep catastrophic stops on, if at all, and they're way out. And it's not so much I can afford to lose the money, it's the risk that I'm managing is different. So I created a little, just, a target and a bracket ATM in Ninja. I'm gonna show you how I would use that if I were you. Again, this is all about, you guys and your $5,000 or $10,000 accounts or $20,000, your small accounts, okay? So we're gonna do that, but we can't do it easily without the market being live. So that's why I'm just telling you about it now. I would really like you to be here if you can tomorrow. So, whoops. So I can show it to you. What am I looking for? Here we go. So I can show it to you and explain it in more detail. So that's that piece. And then the part I want to have the bulk on today is understanding springs and upthrusts. But we're going to go from a chart and I'm going to point to the dome. And this is the easiest one to learn how to see on the dome. So we're going to start with just the concept of them. And the other thing about springs and upthrusts is that I've said this over and over again. If you can pick one time frame or two time frames you like, just don't mix them together, you can make a living trading springs and upthrusts. There's no question about it. It by far is the one single setup that occurs all the time, day or night, every market. Doesn't matter the time frame, doesn't matter the volume. You just need some really basic stuff to be able to trade springs and upthrusts, which is why I love them. Now, again, I've said this before, but I really want to qualify those of you that are reading Weiss's book, Trades About to Happen, or reading any of the theory about Wyckofian stuff, which is what this is. Springs and upthrusts come from Wyckoff. Weiss is a kind of a modern day interpreter of it. The only things that I really use from that thinking, from that model, from that paradigm are springs and upthrusts, because that's really all you need. And Weiss will be the first guy to tell you that he agrees. I've had this conversation with him. So the other reason that they're so good right now for where you guys are all at is that they're so easy to transition to the dome. So I don't have a good example to show you on a chart here that I can show you on the dome, because again, the dome is live, we're not. But what I can do is I can show you some examples on the chart and I can explain how those will appear on footprints and how those will appear on the dome. And then tomorrow, I don't have to do that. So we can just look at some live examples as they're happening. And the session is starting tomorrow at 6, if I'm not mistaken, my time. And that's intentional so we can get right before the open, yeah. And then, we'll see some of that during the open. And you can see how it kind of lines up with the open 5, particularly the open 5A. And that's really the crux. If we go back to here, That's really the crux of where you should focus. Okay, so if you're sitting there saying, okay, 2020, I'm going to learn to trade for a living, I'm going to get profitable finally, I'm going to make this happen, I'm going to pass my top step combine, I'm going to grow my account. Okay, if I were you, absent extenuating circumstances like a regular job or whatever, I would be doing exactly that. I would be doing it with the Open 5A. I would be doing it with the first hour high versus that, the second half of it. And I would be doing it with HMOMO and springs and upthrusts. If you just do that group of little setups combined and separately, that should be all you need. And the confusion about how some of the range setups work, and the confusion about how you'd play some of the edges, and all that other stuff we've talked about, it's not bad information, and those are things that will be really valuable to you. But for the purposes of going forward, for simplification, for getting you out of the starting gate, focus on Open 5A, first hour high and low in conjunction with Open 5A, high Momo, springs and upthrusts. That is a perfectly large, in fact, a little bit too large portfolio of setups for a new trader. More than you will ever need. So given that, the next thing I want to do this morning, again, is just give you a basic introduction to what I'm looking for in springs and upthrusts, and I'm going to do it on the chart, but I'm going to explain what I'm talking about in order flow concepts, because this came up when Lee was showing me one of the little bot ideas he's working on, and it's great. I mean, there's no way that's not going to make money. It's one of those things you could turn on and it would just execute for you and print money, in small amounts at a time, but hey, picking up $20 bills, right? And, there's stuff like that out there. But in order to even fathom how to trade it, whether you want to trade longer time frames or really get granular, like I'm talking about with order flow, you have to understand the theory of it at a level, the next level up from where all of you are. So that's kind of why this should all be challenging to bring together, but I'm confident you can all do it. All right. So I'm going to pause there for a second. I'm going to blow this up. And along the way, I am going to tell you about a couple of little tunings that I did to Ninja for those of you that are setting up the same way my Ninja's set up. I'm not going to dwell on it. I won't answer questions about it here. You can ask me in docs, charts, and indicators, but you'll see like seconds are back. And, I reconfigured a couple of things. I added this little view here, which is really cool on the range chart. That's just the previous highs and lows, which is an interesting trending indicator, but it also gives us some really significant edge points when it pops up. So, imagine that kind of right there, and you get the idea. It just increases your odds when you're trade hunting. So before I do that, I want to stop and just pause for any questions so far. Okay, so I see a couple here. Let's see. David, I will say this, Jeff, even though this is winding down class, I appreciate that. I really do. And keep telling me stuff like that, because part of the problem, I got to tell you, I'm going to go back and tell you about what we're going to do, Lee and I, going forward toward the end of this session. But part of my struggle with figuring out how to do that was just, I love doing this, but it takes a lot of energy. So there's really a hard balance there. My personal trading really suffered in the last 3 months. And that, I can live with that, but for 2020, I got to rethink it. So what I can do and what I can't do just time-wise. So anyway, I'm going to go through a couple of things. We're talking about the springs and upthrusts. There's two good places to see them. Minute charts and second charts. And you can combine that with footprints. I'm not going to get into that right now. We're going to do a lot more interesting conversations about footprints tomorrow and later on in the kind of going forward. So I want to focus primarily for this springs and upthrust discussions on the second charts and the minute, because if you want to play kind of the bigger reversals at the overnight highs and whatnot, you should be looking at the minute chart between 1 and 5 minutes. Longer than that is too long, and that'll give you a pretty good bird's eye view of what's going on for the day, as there's a really good example of one right there, which I'm going to come back to. But if you want to trade more of as a scalper, and you want to do more trades throughout the day, and you want to trade at night, then I would go down to a faster time frame. I do dinker around with this a little bit, between 15 and 90 seconds is what I'd recommend. It depends on the instrument. It depends on the time of day. So, you know, take that, and you just have to fine tune it is really the story. So just for this exercise, let's use 45 seconds. And we can see a couple of really good examples. So let's do this. I want to do one thing also here. If you zoom out a little bit when you're doing this, you will get an idea of, again, in Wyckoff, the only thing I'm really interested are springs and upthrusts. Now, there are two filters for springs and upthrust trades, and it's remarkably simple. Sommer, you're going to love this, okay? It's actually a step one, step two, but it's really straightforward and really simple. You're looking for some sort of immediate trend. So that's the first thing you need, okay? So, you know, I'll kind of, absent a PowerPoint, I'll just say, and my arthritis is bad this morning, so if there's misspellings, too bad. Okay, you need an immediate trend. Immediate is exactly what the word sounds like. Immediate. It's not the trend from last week. It's not the trend of the range chart, you know, which clearly is up. You have to go into the time frame you're looking at. So if I looked at this chart right now and I was looking for springs and upthrusts, and obviously it was the close, so it flattened out, but let's just kind of look at it like that, okay? The immediate trend here is very simple, okay? You just look to the left and right, okay? Right now you have a higher high, a lower high. The immediate trend is down. That's all you have to be thinking if you're trading with upthrusts and springs. Now, it gets easier when you go faster because it gets really obvious, all right? So, you know, what's the trend right here, okay? It's up. Forget this that just happened, it's up, okay? It's flattening out. What's the trend from here this way? It's down. You have to get really good at identifying just the immediate trend. And again, you have to adjust whatever your definition of immediate is to the time frame you're working. I typically look at, you know, the last 20 or 30 bars. That's a pretty good test. So if it's 30 seconds, you know, what's the last 10 minutes look like? You know, and that's easy to see. Well, let's see. Okay, it's flat, you know, but then when I look at this, you know, literally I just have to look from here to there. Okay, it's trend down. Okay, that's all you need to do. All right, from that's step one. What's the immediate trend? If there isn't one, springs and upthrusts will work the range, but they will be much less precise. It will be harder to make money using them. So if you're in a consolidation, you know, and I've said over and over in this workshop what those look like, you know, the 8-tick dance, as Pete likes to talk about in jigsaw sessions, when you see it doing this, or, you know, on the dome going up and down like this, you know, within a range of, you know, a point or two, or, you know, over on the ES, you know, 8 ticks, 6 ticks, that's exactly what we're talking about. So that's sideways. But the minute that behavior changes and, you know, every attempt to go up doesn't work and every attempt to go down goes farther, then you have a trend. So that's all you have to do to define the trend. Now, the minute you have the trend, so at this point, we have defined right here that there is in fact an immediate downtrend. So now what you're looking for is, thank you, David, I see an aha moment. Now what you're looking for is attempts to bounce with shitty volume. And I'm using shitty volume because that is the technical term, okay? And literally, I don't want you to use anything else. I mean, you don't have to say shitty, but there's no, you know, I don't, well, if it bounces with 1%, no. How about 10%? No. 50? No. There's no number, okay? It's like we're training a dog to use the potty, right? It's just, it's binary. It's yes or no here. Don't get caught up in looking for ratios between the ups and downs. Just look for higher lows, higher highs, depending on which way you're going, and look for lower, underline lower in bold, volume attempts to break what you have defined as the immediate trend. Okay, everybody's with me now. So we're going down, and as we're going down, there will be always attempts to bounce. There's one right there. So it bounced from, oh, you guys want me to turn these on? I know this makes it much easier. Feel free to tell me that, by the way, if I'm talking. Say, Jeff, turn on the crosshairs. I know that makes it much easier. All right, so you can see like right here, okay? Well, first of all, it was a logical spot. But when it did that, you know, what was the energy down? It was 10K. Okay, well, that's double the last attempt to go up, and it's up there with some of the up thrusts. So clearly that's a strong move down. And now you see it bounce by what, not even a buck-ish. And it does it on like 2K. And then it, wiggles around there for a little while. And then it does that. Okay, guess what? You just witnessed an up thrust. That's all there is to it. An immediate definable trend, a lower in relative terms volume. There's a real nice one right there, right? 400 versus 5,000. Again, there is no magic number. Now, when you zoom in to the delta on a footprint, you can find some magic numbers where it's not necessarily the ratio, but it's the grouping of the ratio. And Lee and I had some good discussions about ways to monetize that balance or that imbalance. But for the purposes of this setup, that's all you're looking for. It's literally that simple, guys. There's just nothing else you have to worry about. So don't, forget all the Furu bullshit. Forget everything in David Weiss's book, which is a wonderful book. And again, it's not that that stuff's wrong. It's number one, to publish a book, you can't just have one page, which this would be if it was, How to Trade Springs and Upthrusts by David Weiss. However, the background material is really good to understand. To execute, this is all you need to know. And you'll see this continues over and over again. I mean, if we just watch this time frame, this is going to go on. There's a 3K attempt to bounce. Another kind of, well, it's not going down quite as fast, but certainly not going up yet. That's why I have the colors set the way I do. Reds are bright, pinks are kind of, well, maybe not. Yellows are warnings. That I gave you that color scheme in the Slack. And watch what happens when it does it again. I mean, this is almost a mirror image of what happened right here. And so you just have to learn to get nimble when you see that happening. So if you're here and you just see the volume's pathetic and you're watching the dome and it just doesn't have any energy, the momentum tails are not going up, get short. Put a stop in, a point above it, at 3 ticks above it. You got plenty of places you could mark that. So what you've done is you've done this, guys. You've go back to the other thing that I just posted in the Slack about, let's see, I think this is it right here. Yeah, this is it. Choose the setup you're playing. So in this case, we're looking for that up thrust, the opposite of a spring. And then the only thing you need to be considering is this. There we go. Where am I wrong? Because if you're right, it's going to knock you over. Yes, Lee, great question. Please continue that conversation in chat, you guys. Good question, Lee. So you see what I'm saying here is once you see the setup forming, the only thing you need to do is pick a stop and then just let it rip because there's nothing else to think about. And so it's literally that simple. So let's go back to here. I throw on my short and, I put my stop right there. And that's why that ATM thing I mentioned a minute ago is important. I'll show you that tomorrow. And then after that, just let it go. I mean, look the kind of moves you can catch. But if you wait till they start, you will miss the trade. It's really important that you get into these as soon as you see them setting up. And if that's not obvious, it should be. But again, it's time frame dependent. If we jump out here to the 5 minute, you can see some real similar setups that you had a lot more time to get into. Here's an example of one here. With this real steep drop, the immediate trend was down. Unless you were already in there trading that, with the open 5 and the continuation into the first hour. That's an opening drive, by the way. Unless you were already in that, it would, you would have had to catch another smaller time frame to jump in. So, just for fun, that's a good example. Let's just make that 3 minutes. Yeah, wow, that was a pretty heavy selling. So, all right, let's not talk about the open 5 trade, but you can see the beauty of it. So, your trade ended here. You went and got coffee and you came back. And now we have an uptrend going, right? The immediate uptrend or the immediate trend is up. And then that stops and we start consolidating. So your radar should immediately light up here and say, okay, if there was a place where there might be an upthrust, this is exactly what it would look like. It would be right there. And sure enough, you got a whole bunch of them. So that's how you kind of scout for those things. And notice how, Lee and I were both being really emphatic about, this sequence here that, you really have to make sure you're not doing this backwards. Don't let the chart tell you the setup. You should be looking for the setup and then the chart information confirms it for you and you execute it. And then the next step of improving your skill with that is not needing the chart at all and just doing that on the dome. So in this particular example, I can't show you the dome for that instant of the time frame, but that's why I saved this, because if you just look at the action in the NQ right here, and look what's been happening, and it should roughly correlate to this chart over here, because I don't know exactly what time frame I took this snip, but let's just assume it does. So it looks like that's about right, isn't it? It's like, so this little consolidation here is what was going on here. Does everyone agree that looks about right? Anybody disagree with me that we could treat this snip? Okay, I'm gonna go ahead and use it. So what you can see is that consolidation was going on, but if you zoom in on this over here and look at what was happening, the immediate trend was down, and then it turned, and here's a spring right here. So you can see one actually on a 45-second footprint happening. And another way you can see it is what we call trapped sellers. The delta at the bottom of both of these footprints was heavily on the seller side. So, and Lee and I were talking about this again. One of the things I just do automatically in my head, but he's working on some really cool code to do this, is that's okay, David. Is, if there's 25, let's just use that number. Let's say there's 25 trapped contracts that opened there, even though there's better ways to do that math, but for simplicity. Then where are they going to have to cover, and where will they bail? And you can see that as the price moved up and away. And if you're not used to looking at footprints, this isn't going to make sense yet. If you're not used to seeing domes, this isn't going to make sense yet. But if we were to go back and look at this time frame on a regular chart, you would see what I was just talking about, where it comes down, it tries to sell, it can't. That's the opposite of what I was just talking about over here when I was saying, it's trying to go up and it can't. It's just the other way around. And you can see them coming here. These are springs. So, depending on what instrument and what time frame, I might be able to go back and real quickly find that spot. Let's see if I can do it. Probably lost a lot of you, but yeah, this is probably not. Let's get 30 seconds. Okay, so what I'm talking about is right here, and forget whether that matches up with the footprint on the dome or not. You can just see it happening here. The immediate trend was clearly down, okay? And it came down here, and this is another way to filter this, is the delta changed. But look what happened as some buyers came in. Clearly, if people were still in any kind of shorts going down here, they got trapped on this turn. And so what you're looking for in springs is any attempt to sell, like, if you're looking at candles, there's one right there, that fail and cause those guys to get trapped again. So that's what you would see if you were looking at candles, but hopefully you've already seen how imprecise that is. You don't have any idea what's actually going on within the candle. And that's why the dome and or the footprint view is so much more informative. And that's what we're going to talk about a lot more tomorrow when we've got some live data, and I can show you some examples of this. But going back, summarizing, springs and upthrusts, they're just perfect opposites. Springs are when you have an immediate uptrend, there's a low volume pullback, and then it continues the uptrend on much stronger volume. That's a spring. Just don't try to do it from one time frame to another. You have to just look at one time frame. Otherwise, you'll get fake signals. Number two, an upthrust is the exact opposite. The immediate trend is down. It tries to go up. It can't. It gets pushed down even harder. That's all there is to it. Okay, I want to stop there for a second and see if you guys have any questions or comments. There's only one person talking here, so I'm not sure what the rest of you are thinking at all, or if you're just waiting to watch it tomorrow in the recording. Okay, nobody's saying anything. All right, not sure how to interpret that. Okay, cool. All right, that's great feedback. That's what I needed. Okay. Can I talk about how the volume are? No, David, no. The numbers on the volumetric chart are not part of this workshop at all. And when I finish up and talk about what we're going to do going forward, I'll explain that. But it's just way too much information. Number one, there's a million different ways to configure a volumetric chart. And all I'm doing is showing the deltas. You know, Lee likes to see the actual bid and the ask spreads. And for certain types of setups, that's more important. Remember, this workshop today, this webinar, okay, has nothing to do with that subject whatsoever, okay? Today, we're talking about seeing chart patterns on the dome, which is why we're talking about it. Can I show the trap trader thing again on the 30-second chart? No, I won't, Bear, because we're going off on a tangent I don't want to go. I'll show you that live tomorrow, okay? But I don't want you looking for it on charts. It's what you're looking for on charts, Bart, which will be much easier to process, is the following. Hold on, I'm getting confused between my live charts and my picture I took. Okay, what you're looking for here is simply the swing volume. That's all you're looking for. So if the trend is down and the swings up are weak relative to the swings down, that's all you care about. That's it. End of conversation. Okay, that's it. That's the mentality. So a spring is a long and an upthrust is a short. Absolutely, that is completely correct. So these are upthrust shorts, okay? And the other way, you know, going up here, these would be spring longs. So you have to get the immediate trend right. You know, so right now, you know, if you're looking at this kind of action, you don't want to be looking for springs and upthrusts. You're in an HMOMO open 5 transition to a first hour low opening drive trend down day. So the only thing you possibly want to do like that is HMOMO, get short, get a stop in and ride the fucker down, okay? So that's your thinking there. And then as soon as that stops happening, now you're going to say, okay, you know, I'm going to have breakfast and I'm going to look for intraday trades. So you take that hat off, your general manager pats the guy on the back for trading the open 5 well, kicks him out of the chair and says, okay, now we're looking for springs and upthrusts. And there's the first one right there, okay? It tried to reverse. It did it on relatively low volume. It probably caught some shorts, reshorting it there. It came down. It was not the energy it went down with, but you know, certainly consistent. But it made a higher low, okay? So you want to watch that spot right there, okay? So look where my cursor is. So this implies that there's danger to the shorts that entered right here. And sure enough, there is. And look what happens. They just get reamed, you know, and that's exactly what the setup takes advantage of. It takes advantage of retail trend traders that are not understanding the shift in order flow. Do you guys all understand that? Is the immediate trend the only filter? Yes, that is, yeah. The setup is very simple. Okay, I'll type it again because it's really that simple. I just want to, again, I have rheumatoid arthritis, which is an autoimmune disease. It's not the old people kind of arthritis. So mine kind of comes and goes, but I normally type about 150 words a minute. I'm really good at it, but when it's like this, I can barely hunt and peck. So, okay, the first thing you need to know is the immediate trend. Okay, that's all you need to know. Is there one? What is it? Okay. Number two, if it's, you know, if it's up, okay, you're looking for springs. Okay, if it's down, you're looking for upthrusts. Okay, and quite frankly, that's all there is to it. I mean, you can make it much more complicated. You can filter it more. You can filter it with momentum. You can filter it with edges, and we'll get into all that. But until you understand order flow on a much more granular level, this is by far what you need to understand. No, there's no delta whatsoever in it because it doesn't take that into account, Alessandro, and for very good reason. The delta reacts too slowly to this. Did everybody hear what I just said? I'm going to say it slower, so you do. This is me being a furu. I love when they do that, like they're giving you, you know, the golden goose, you know, and they say, so this is what we call our, you know, open 5 wonder magic bullet 007 gold silver indicator, and it's only $3,000 a week. But it will tell you, you know, that's the kind of crap. And you know what? It doesn't matter. And look at, here's the reason, okay? Look at this setup on a very fast time frame. Look at it on 15 seconds, okay? Notice how by the time the delta responds, here's a really good example. You had a really good upthrust short right there, and the delta didn't start to react until after the signal. Okay, yes, exactly. That all is nonsense. So, you know, I got to give David Weiss credit. His book's title is perfect. Upthrusts and springs, quite literally, guys, are trades about to happen. Because if you short this spot right here, the second you see a lower volume attempt to bounce, and you short it with your stop here, I mean, literally, you could put a stop 2 ticks away. The only things that can happen are A, you're wrong and you're stopped out, or B, it is in fact an upthrust and it overwhelmingly goes back with the immediate trend and your trade is immediately HMOMO kind of profitable, and all you have to do to manage the trade is keep your stop in place to trail it down. And that's it. So again, if you're struggling with order flow, open 5, okay, let's go back a bit. If you're struggling at all with order flow, the setups you really need to be focused on are these. Give me 2 seconds here, guys. Stay in tune with this document. Focus on trading the open 5 with the order flow, which will catch a lot of HMOMO. After that, start looking for springs and upthrusts, particularly around the first hour high and low, because the first hour high or low, if you combine that with a spring and upthrust, you can find trades that have 95% probability of working. Did everybody hear what I just said? That is a fact. And I'll show you, you know, literally hundreds of examples. Just pick a chart, pick an instrument. There's one right there. I mean, I just literally grabbed an oil chart and there it was. It's just remarkable how consistent that is. So what I'm saying is the confluence of an opening 5 move that hits hard into a first hour and turns, how that will often be a really good spring and upthrust setup as well. So this combination of just this time frame in the opening hour and a half or so, and then any other time of the day or night in any instrument, HMOMO and springs and upthrusts, everything else I've taught you, you can pretty much put on the back burner until you get better at it, like ranges and edges and ledges and all that other flips, all that other stuff. You'll get better at those if you just focus on this. So this is really kind of, you know, how you get that $4,000 account to work. And we're going to talk more about that in a minute. But I'm winding up this topic with that. So the setups you really want to focus on going forward, once again, open 5A with order flow. So that means HMOMO, basically. Then the transition of that into the first hour, into the initial balance. And any other time of the day, any other instrument, springs and upthrust or HMOMO, given what I'm telling you today, okay? So, I want to make sure I have enough time. Let's see, we started this one when? At 9. Okay, so we're just going into the end of the first hour. Okay, back to springs and upthrust for a second. One of the things I did on my charts, which you might find useful, I still have the ones out on the wings, but as I've told you before, I turn the monitors off. And so if you're looking to transition from charts to the domes, and particularly springs and upthrusts, I suggest you set up this way. Make for each instrument, or for 2 instruments anyway, make a 4-panel tabbed group like this. I have the following on. I have a footprint. I'll talk more about that later in the week. I have a range chart and I added one thing to it, and that's just the previous day open, high, low. And that is built into Ninja. And I'm just going to let you see the settings right now, and you can come back to the recording. And I have only the high and low turned on, nothing else. And that's how I have it set up visually. Okay, there's a reason for that, and it can give you some really good ways to identify ledges, like right there and right here. And it also helps you identify some high volume nodes. It's only on this range chart though, and again, as we wrap up this week, I'll try to give you some more examples of how that's useful. The minute chart is exactly the way it's been all along. I haven't added or changed anything. I do have that open, high, low, close on there as well. That's what that line right there is. So, you know, if you kind of zoom in or zoom out a little bit, you can see you can see how that comes up. That's the previous day low, and this is the previous day high. So the only other thing I want to mention about, and I'm just reviewing the things I changed in my setup real quick here, is that I've grouped them together with colors. So every time I trade an instrument, they're linked. And that's really handy. For example, if I decide I'm going to trade oil, and yes, it's still behind me on the domes, but what I did was I moved the power meters and the actual trade windows all together like I had them before on Ninja 7. And now I've got charts overlaying them. So unless I'm actually going to go into a gold trade or whatnot, I don't need to see that. But if I want to keep an eye on the chart, I can just do it very easily. If I change any one of these, it will change all of them in the group for that instrument. And as you can see, it does it very, very quickly because I've got the amount of data, the number of days, all down to the bare minimum. So it's really efficient. It's not pushing my processor at all. When the market's open, it doesn't crash. And so that's what I'm doing for those of you that are kind of mirroring me. During the day, I'm keeping the ES and the NQ up because it gives me the ability to see volumetric on the ES, which is much more informative than it is on the NQ. But then I can go down here and look for some good scalping opportunities on the NQ. And I still do that a little bit on the charts, at least I will until this workshop ends up. So I will be explaining that in the session tomorrow in a lot more granular detail. But notice I have this one grouped together in blue, this one's grouped together in green, so I can change them independently of each other. And what you're not seeing is, you know, I still have my oil chart and my gold chart on the other screen, but what I'm trying to get you to understand here is that if you're going to trade order flow on the dome, you really want to be zoomed in on the dome. I don't even want to have to look to another monitor. So if I want any kind of a chart view, I want it right in the same eyeball, so I don't have to move my head. And so that's the purpose of this. And I have found some value with very fast volumetric views of the NQ, in some cases, even as fast as 15 or 30 seconds. And again, this is stuff that Lee and I are working on, like these little trap seller bots you could write. Here's one right here. You could just sell there and, you know, buy it back when those guys, you know, get out of their trade. We will talk a lot more about that, and I'm going to explain in a minute. That's the next topic. I'm going to talk about the mentee/small group going forward. I'm going to answer questions about that. I just wanted to wrap up what our topic was for today, which number one is my domes have some new stuff on them. I showed it to you here with respect to ATMs, with respect to where the momentum tails are, excuse me, are with respect to the current and total trades. I'll elaborate more on that tomorrow. Also, the new setup of my domes and charts with respect to my main screen. Elaborate more on that tomorrow as well. Our playbook winding down a little bit. That was another subject today. Wanted to just emphasize as we review what we've covered. I would encourage all of you to not actively pursue the other setups for now, but what I would really like to see everybody drill in on the open, the first hour, then plays off that later in the day with springs, upthrusts, and high Momo. Now, if you're trading other instruments in other markets, obviously that might be a little different, but I think the same concepts sort of apply. I know, you know, the DAX has an open 5 because every market, you know, when the big guys come in, you know, they push it around a little bit. So, you know, we'll talk more about other markets too down the road. Okay, and we'll talk more about these filters and how I'm using those. Again, this will be part of the session tomorrow. But I'm trying to wrap up part one so I can tell you about what we're going to do going forward. So with that in mind, I'm going to end here, take questions on that only, and then I'm going to tell you about what we're going to do going forward and what the group will be like, and if you'd like to join us, how to do that. Okay, questions. I'm reading the chat. Sweeps are crazy in NQ. Yes, but sometimes those sweeps are ways to make money. Jury. A sweep can happen because of an imbalance, and Lee has some good tools for this. I just have kind of a natural sixth sense of seeing it. And, you know, that's a really good example, though, of something you cannot do in a one contract account, you know, in your $4,000 account. You can't try to size your way into some of those setups. Whereas, you know, in my $500,000 account, you know, if I go in with a couple of contracts and it doesn't work out, it's not the end of the day. However, in the $4,000 account, it is exactly the end of the day, maybe the end of the week. So I'm going to try to wean you guys away from that kind of thinking and just give you the really, really just, you know, here's one that's 85%, here's one that's 89%. And if you're going to screw this up, it's going to be on you, because all you can do here is really execute this wrong. So that's going to be our focus going forward. I hope that makes sense, and I hope the value of doing that makes sense. So Bar, what you're asking is exactly what we're going to talk about tomorrow, so hopefully you can be there. And this little behavior that I was showing here is exactly how you can see it. For example, when the dome will pull down to a previous consolidation level, which in this case was 04, and if you look in here, that actually is a little high volume node, and it's the bottom of the range I was working. And then as it worked its way up, you could see little springs happening. And because I didn't reset through that, and I reset at different times, you can't see it on this dome right now. But had you been watching it, you can actually see the parallel between the two. So, and any of the free domes will, or the free footprints will allow you to see what I'm looking at. You don't need to buy the lifetime license to do this. I use a very simplified footprint view with no bells and whistles. So feel free to use any of them you want. It's the concept that I'm driving at. Okay, so let's try to see if that answered that question. Is that clear? Are you guys following me on what I was just explaining about to Bar and to Remo and to Jerry and about this chat topic that's going on? Okay, cool. Everybody's on board. All right. So with that in mind, this is the end of our official discussion for part 1 today. I'm not going to stop the audio. I want to keep it running, but we have hopefully covered this, and we will pick that up tomorrow with seeing the chart patterns live. I may start this session early. I have it scheduled for 6 a.m. Because of stuff going on in my life. I've actually been up early. I've been dealing with life challenges and also radio silence. That's why I've been gone. I just had to charge my battery, my personal battery. It's really hard, you know, it just uses a lot of energy to you know, talk to you guys all the time, and I love doing it, but you know, and chatting privately and answering questions, it just, you know, I feel like I'm responsible for 50 people, and if I'm not there every day, what are they going to do, you know? So that's always been a challenge. Anywho, so that's the end of this, and now I'm going to go on and tell you what we're going to do. Lee and I are going to collaborate for the next 3 months, and basically we're going to test an idea of, you know, that the Gestalt, you know, the idea that, you know, more smart critical thinking minds are better together than separate. But what we don't want to do is we don't want to, you know, be a Furu channel, and we don't, you know, all the stuff we've been criticizing, we just don't want to do. So, you know, I struggled with this for the last couple of weeks, and I read all of your ideas and your emails, and I really was stuck how to do this. I kind of established some guidelines for myself. Number one, you know, the people that were going to come along, you know, had to contribute to it. And number two, they had to pay for it. You know, I wasn't going to give it away. And number three, we had to have a mission that we were heading somewhere. You know, I just don't want to have a group to see how many people we can get at X amount a month. And, you know, that just, those are just, the bigger they get, the less useful they are. So I decided, and talking to Lee, you know, he and I kicked some ideas around that kind of polished up what to do. So here's the concept. I created a new private, sorry, I've got 2 computers running in 17 windows. Okay, I wanted to be back here. I created a little private channel in the Slack called the Motley Crew right here. And right now, the only 2 people that can see it are me and Lee. And what I'm going to do is, for the people that join our little small group, this is where we are going to post our activity in this private channel. So the rest of you will still have access to everything that we've done in the workshop, although I may delete a lot of the just chat that has nothing to do with trading and whatnot, because I need to stay under 10,000 messages, and I think I'm at 9.2 thousand. So I need to clean up a bit, but I will leave access up for a couple of months, certainly, so you guys can watch the video recordings and whatnot. But there's going to be nothing new posted to any of those channels. And there's going to be a focus on a real drilling down into order flow for people that are truly serious about trading for a living and perfecting the craft, And it's going to consist of exactly what I can't tell you for certain yet, but here's what Lee and I came up with. We're going to do 2 sessions a week, either he or me, or maybe both of us. But the minimum there'll be is one or the other of us twice a week. And the idea will be kind of like, okay, here's the beginning of the week, and here's what we're looking at. You know, here's kind of the chart setups, zooming out technically, and, you know, here's what's going on a macro level, and, you know, intermarket analysis, and, you know, geopolitical, and, you know, just kind of the 10,000 foot view. And, you know, that alone is worth more than we're going to ask for this little thing. But, and then we're going to, one of us again is going to do kind of a, how's it going later in the week, Wednesday or Thursday. And again, we both may do both of them. They're going to be just short, you know, quick 30-minute recorded webinars, and they're going to be shared in this Slack channel and through Zoom, but only among the people that are in the mentoring group. Everybody else, again, will have access to everything that already exists, but nothing past January 4th. So none of the new material, which will consist again of at least 2 sessions a week of just market awareness kind of stuff. Then it's my intention to add to that something topical, if not once a week, once every other week. In other words, a specific, here's a 30-minute webinar on X, and make it fairly formal, you know, with PowerPoint slides and all that. Something that maybe the group needs that I'm sensing, or, you know, maybe a more advanced topic, or maybe something simple like how to automate stuff in Ninja or in Sierra. Both of these, all of this, I shouldn't say both, all of this activity is going to be centered around Ninja and Sierra. Lee is in the process of moving, as I mentioned earlier, a bunch of his stuff to Ninja. And so, you know, it'll be an opportunity to play with some of that stuff. And so it's going to be a really unique, neat opportunity to work with a small group. I'm not going to limit how many people join it, but I'm going to enforce that people are there and contributing and of value, because we're going to charge so little for it that otherwise it doesn't make sense for either Lee or me to even do it. Okay, that's what we came down to. So here's how it's going to work. It's going to be $49 a month, and that's you know, my philosophy is trying to make everything as close to free as possible. That price probably will go up down the road, but everybody that joins us now is kind of going to get founder grandfathered in, because they're going to help us figure out how to do this. We ultimately will probably move to Discord, to a private Discord channel, so everybody can easily talk to each other, but we're not sure. And that's part of the idea of the first 3 months. So the way it's going to work is I have a link, which I will post, or I will email to everybody. It's just a button, and it will be a $49 subscription in PayPal. And you can go for as long as you want. Our idea is that it's going to go January and February. Lee's gone for half of January, so I'll get it started. And then he'll come back and do something in like the 3rd week of January. And then we'll do a couple sessions in February. And then going into the end of March, you know, we'll kind of be talking about what we're going to do next. Okay, so okay, hang on one second. I'm going to let's see. Can I post a button? I think I can. There is. Oh, did you guys see the button here? Yeah, maybe you guys saw this on the screen. Let me see if I can post this in the chat, because all you have to do to join it is just click on this button, I think. Let me see if that works. That should bring you to a subscribe thing. There you go. Okay. So $49 a month, and you cancel whenever you want. You got to join for a month, obviously. There's no refunds. There's no whining. It's a no whining zone. We will record everything we do, and we will share it in the Motley Crew channel for now, which, as I said, we'll hear. As soon as you subscribe, you'll be invited to the channel, and I will make a little private email list for us to talk to each other. Let's see. Oh, I didn't share that to the whole group. Hold on one second. Let's see. Okay, here's the link to the PayPal thing. That's the PayPal button. Okay, so anybody that wants it. Now, other stuff we're going to do there. Lee and I have some really interesting ideas on automation and bots, and, you know, coaching programs. And, you know, if you look at Lee's website, those of you that haven't, you know, he's actually got a real business like I used to have doing this, and I really don't want. Whoops, emoji. Okay, thank you. My arthritis hurts. Okay, so he's got a lot more going on, and he's already got some partners that know what they're doing, and you know, so it's a lot better home for some of the stuff. You know, maybe we'll integrate with that. Who knows? He's got some infrastructure in place that could be useful. So, but again, we're going to leave this open and kind of have the group kind of figure it out along the way. Yeah, the weekly time slots. Well, there definitely will be a Sunday afternoon or Monday morning because there has to be, Steve. We have to be able to, you know, here's what's coming up this week, right? And my sense is that maybe Lee and I will do different ones. Like maybe he'll do one on Thursday or Wednesday and I'll do a different one and we won't compare notes. You know, he and I just were kicking our ideas around. And, you know, our approaches to the market are both similar and complementary, but they also are in some ways different enough that there's a lot of synergy that in the differences. So, you know, you'll probably find us playing around with some of that stuff. So, you know, because I'm, you know, have my kind of polyphasic sleep, and also because of this, and this is the next part of this conversation, I'm not going to do another workshop, at least not in the next 6 months. It was just too tiring. I mean, a lot of you could sense it, but you know, I just burned myself out. And when I hurt my back trying to set up my second computer while I was doing the workshop, you know, that's just a really good example of Jeff doing way more than he should be doing at his age with his infirmities. So, you know, I really wanted to come up with a way to make this work for everybody and still, and not kill myself. So this is what I came up with. And the second part of that, in addition to the Motley crew, which is you know, you guys, those of you that join it, is I am going to do some like one-off workshops that I'll promote on Surfing the Markets or, you know, Twitter, or maybe Lee and I'll promote them together. You know, maybe it'll be, again, they'll be free. Maybe they'll be, you know, $30 or whatever. And, you know, in a lot of cases, if they're topical for what we're doing, I'll just invite you guys for free. But I'd like to do that just to kind of spread the word a little bit and attract some new talent. But, you know, I don't want to attract a whole lot of noobs that I have to take through a whole workshop again. You know, maybe we'll let them have access to some of the material from our workshop as they join us. I don't know. I mean, I'm leaving that open, and I really don't have any preconceived notions. Look, my objective is a little different than Lee's, but it, you know, but they're parallel. He's putting together a business that is really going to be a good business. I think he's found a really cool niche in order flow. And so I'm really anxious to work with him. And he's also, you know, 10 years younger than me, so he can do more than I can do. And at the same time, you know, I've been an instructor and a college professor for 40 years, and I love doing this stuff. But one of the problems with doing it like this is I can't see you guys and I can't interact with you. And so I have to, you know, look at chat and I have to deal with all the different screens. And, you know, I'd really love someday to, you know, be able to do this with more video. And I just don't want to administer it, quite frankly. And Lee has some infrastructure to do that. So this is kind of how our ideas came together. And so you may see some other events promoted that have nothing to do with this. And obviously you'll all be welcome there at those things as well. So that's kind of the, it works. Okay, cool. Thank you, John. I appreciate it. The last thing I'd like you guys to do is, as the week goes on, you know, you've given me some feedback and I love it, and it's great feedback and I appreciate every word of it. At some point, I'm going to ask for it publicly. I don't know exactly how yet, but, you know, maybe I'll just post a thank you for everyone in the workshop in Surfing the Markets. And if you guys want to respond there, you can. But you know, I'd really like for some of the people that didn't join us to get an idea of the kind of stuff we did, and if it was helpful to you or not. Not so much to do it again, because I really don't think I'll be able to, but to see if maybe, you know, one topic at a time, or, you know, in bite-sized chunks, there's a way to do that. And a number of you suggested that, you know, God, it would be really neat if you just did this topic and it was, you know, $50 and, you know, 3 hours or whatever, you know, whatever. And that makes a lot of sense to me. If I ever do a workshop again, I will tell you this. It'll probably be more like what, you know, Linda Raskey's that she posted, or that kind of thing. You know, if I can't be a guest on somebody else's platform, I'll probably do an intensive, shorter workshop, maybe at the end of 2020. It'll cost a whole lot more. And so if you know any friends that maybe, you know, might be appropriate for that, you know, we can talk about it. But you know, I sense that would be really valuable to people. I can't do it very often. It takes a lot of energy. So if I'm going to do it again, I'm going to make it worth my while. I don't know exactly what that means, but you know, it would probably be 2 or 3 times what you guys paid. And I think it would be worth it, but it's not even on the horizon. So for those of you that asked me about that and your friends that might be interested, it might happen second half of 2020, I think, if I do it at all. But in the meantime, I think we're going to build a kind of a la carte, you know, pick the items off the menu you want approach. And so the idea of this little motley crew group is that you guys can kind of help us do that and learn along the way. So I think it's a really cool opportunity. I think the idea to put it together, you know, that Lee and I were able to construct is a really cool idea. And I think it achieves everyone's objectives. So I hope that all makes sense and that you're all interested. We'll see how many people show up. It's going to go forward, you know, if there's 1 of you or 20 of you or 50 of you. So, you know, don't worry about that. So we'll see. I will post more information about that in the group and by email as time goes on. Those of you that are subscribing, I will email you separately. Again, it won't be till the end of the week though, as we wrap up. I don't want to short sell the rest of our workshop. And that topic, one more time, we are going to do one more organized session, which is going to be the one tomorrow morning. I may do one more later in the week on trading psychology of a $4,000 account. Is that an interesting topic? Would you guys want that? Yes, do that, I see. Okay, okay, let's see. All right, let me try and find a good time to do that. I will work on that. That will be the only other session I'm going to do though. So trading psychology and emotional management when you only have $4 grand. Okay, because that's appropriate and timely. All right, so with that said, are there any questions about anything we did today, whether it's Springs or Upthrusts or the upcoming group? I will send out more information about that as we get going. Please subscribe. The sooner the better. Don't worry about the fact that there's a week of the workshop left and you're subscribing a week early. We are going to get some stuff moving there, so, you know, please don't think of it that way. Although if money's really, really tight, you know, you could wait till Friday, I guess. What's the 4th? Friday or Saturday? Friday. Saturday is the 4th. Okay, so if you're interested in that group, I guess I would say subscribe by the 4th at the latest. No later than that, because I don't want to have to repeat people for latecomers. So repeat to people who are latecomers is what I meant to say. All right. Excuse me. I think that covered everything that I wanted to cover. Let me just look at my notes. Yep. Okay. Any other questions, comments? Thank you, sir. I appreciate it. All right. If there isn't, what I'm going to do is I will find a time to put that session, the trading psychology one, try to find a spot when everyone can attend, and that'll be our last one. I will see the rest of you, hopefully everybody tomorrow morning, and more details will be forthcoming. Thank you very much. Have a good rest of the day. Excuse me.